This week I decided to do something different. As you know, I've been trading all year, and most of my trading journey has been focused on the NASDAQ 100. That's where ICT taught us his concepts. That's where I built my confidence, and that's where I found consistency. But I realized something: I never actually tried to test these concepts outside of indices. I never asked myself, do these same setups work on gold? Do they work on Forex pairs? So this week I decided to find out. I traded NASDAQ, I traded gold, and I even tested a Forex pair to see if the algorithmic setups we use every single day work the same way across different markets. And I'm going to break it all down for you in this video, trade by trade, day by day. I'll show you the setups I took, the ones I missed, and the lessons I pulled from the week. And before we jump in, make sure you hit subscribe and stay tuned, because starting soon I'll be releasing a new YouTube series where I'll take the most powerful ICT concepts and make them simple, practical, and easy to understand. So let's get into this week's recap. Monday, August 11. Monday was a newsless day, pre-CPI. That means I had to be very careful with my analysis. From my higher time frame outlook, I was expecting that at some point during the week, the market would take out the previous week's high. But since it was Monday, I also knew this could very well turn into a manipulation day. On Sunday and during London's Monday session, I noticed price was accumulating liquidity. You could clearly see that build up on the chart. I waited patiently watching for that liquidity to get taken. And exactly as I expected, New York session came in right around London close, and price reached up and cleared that liquidity. That was my cue. Price shifted structure, and I set my sell limit on the first fair value gap that presented itself. But this time the market didn't come back for me. It just left without tagging me in. I didn't chase it, I didn't get emotional, I just let it go. Sometimes the move is there, but it doesn't give you your entry, and that's completely fine. That's trading. Tuesday, August 12th, Tuesday was CPI day. Now, CPI can cause a lot of volatility, but the thing is, the market wasn't showing me anything clean. On top of that, I didn't have clear information on the macroeconomic picture, and if I don't have clarity, I don't trade. So Tuesday was a not raid day for me, and honestly, that's still a win. Protecting your capital and protecting your mental capital is just as important as taking a winning trade. Wednesday, August 13th, Euro USD. Now, Wednesday was different. No high impact news, and as I said earlier, I wanted to test ICT setups on other markets. And that's when I found the cleanest setup of the week, not on NASDAQ, but on the Euro USD. Here's what happened. The market had already taken the buy side liquidity, clearing both the previous week's high and the previous day's high during London session. That immediately put me on alert. Right after that liquidity run, the market started to show signs of reversal and gave me a clean market structure shift. And then it got even better, and price left behind an inversion fair value gap. I pulled my OTE measurement from the high down to the low of the propulsion block that had formed, and my entry lined up perfectly with that inversion fair value gap. So I placed my sell order there, stop loss above the OTE high target down at the 100% level of the OTE. It wasn't instant. The market made me wait, but I was confident in my setup. The story was clear. The liquidity was taken, the shift was in place, and the entry was precise. And eventually the market delivered exactly as expected, smashing straight into my target. That trade alone proved to me that ICT setups aren't limited to indices. They work beautifully on Forex too. Thursday, August 15th, gold. Thursday brought in some big red folder news, core PPI, regular PPI, and unemployment claims. So I shifted my attention to gold because gold tends to respect these sessions with strong volatility. Looking at the chart, Monday and Tuesday had been choppy, just consolidation. Then on Wednesday, gold took out the buy-side liquidity of that consolidation and immediately made a market structure shift, leaving behind a beautiful inversion fair value gap. Now here's the difference with gold compared to NASDAQ or Forex. Gold often gives big moves during the London kill zone. So I set my sell limit on the first inversion FVG stop loss above Wednesday's high and my target at the sell side liquidity. London did exactly what I expected. Price retraced back, tagged my entry, and during New York session, it melted straight into my target. A clean textbook trade on gold. And not only did it hit TP, but it gave me one of the nicest profits of the week. Friday, August 16th, Friday was different. There wasn't much in terms of fundamentals, but there was something else. President Trump and President Putin had a meeting, and honestly, I didn't know what kind of effect that would have on the market. And when I don't know, I don't trade. So Friday, I closed the week with no trade. I kept my hands off, enjoyed my day, and preserved my capital. And that's a lesson in itself. Like, sometimes the best trade is no trade. Looking back at the week, there are a few key lessons. First, patience really does pay. On Monday, I missed a move because it never retraced, and that's fine. On Tuesday, I avoided forcing a setup just because it was a big news day. And on Friday, I avoided trading into uncertainty. Those decisions saved me money and stress. Second, ICT concepts are universal. Whether it's NASDAQ, Gold, or Forex, the algorithm is the same. Price runs liquidity shifts, structure, and respects fair value gaps. The setups were clean and the results spoke for themselves. And third, psychology, journaling, and backtesting matter more than most traders realize. Every trade I take, I journal it. I write down the bias, the entry, the stop, the target, the result, and the lesson. Over time, that journal becomes the most valuable tool in my trading. And when I backtest, I see the same setups repeat hundreds of times. That's what builds conviction. That's why when I see it live, I don't hesitate. So that was my week, 1 shot, 1 kill across 3 different markets. I stepped outside of my comfort zone, tested ICT setups on Gold and Forex, and proved to myself that they work just as clean as they do on NASDAQ. And this is just the beginning. If you found value in this breakdown, hit that subscribe button and stay tuned, because very soon I'll be releasing a full video series where I take the most powerful ICT concepts and break them down in the simplest way possible. Until then, remember, the market rewards patience, discipline, and precision. Trade safe, and I'll see you in the next one.